Hello beautiful blockchain people, that's me again at CryptoSpine. This is my next cryptocurrency market overview. So let's start. Let's have a look at the prices of the major cryptocurrencies according to the site of CoinGecko. And as we see, the correction or the pressure on the market continues for the last 24 hours. Most of the major cryptocurrencies have recorded decent price declines, so all price charts are in the red. And we see that this pressure continues. And of course, I want to say that today is Monday and I am supposed to analyze the price chart of Bitcoin, but I will postpone it for tomorrow. Today, I will comment on something relating to the price chart of Bitcoin that many people have discussed within the last 2 or 3 days in the cryptocurrency world. And this is namely the Bitcoin drop ahead of looming dead cross. So this is how it looks like. The dead cross relating to the price chart of Bitcoin in our case is when the 50-day moving average drops below the 200 moving average. So this is the dead cross. Many people consider it as a solid, reliable bearish signal indicating trend reversal and so on. And this is what I have noticed that most of the cryptocurrency people have been talking about and have been analyzing and commenting on during the last 2 days or over the weekend. And now I will share my point of view on this technical formation about this dead cross or moving average or and how it affects the price charts, and actually what I will share what I think about this technical formation when the 50-day moving average crosses and drops below the 200-day moving average. And now let's take the price chart of Bitcoin. And I would like to mention that, yes, let me first add these two moving averages. So this is the 50-day moving average in our case. And I also need the 200-day moving average. So this is the 200-day moving average. And yes, we see that this dead cross or whatever people call it took place a couple of days ago. So this is this dead cross, the looming dead cross, a solid bearish technical indicator according to many. Now, yes, it could be that this is a solid bearish signal. Let me show you the price dynamics in 2017. That was the solid price increase followed by a price decline, and here we see that such kind of dead cross took place, and it was in March or April of actually in April of 2018, and after that the price started slowly to decline and we entered the bear market, or that was the beginning, in the very beginning of the bear market. But of course, if you analyze the price chart, there are many such kind of crosses between these two periods, although they are a little bit different, these crosses here, but yes, to some extent it looks like we're experiencing the same situation if we bluntly apply this logic. But now I will share my point of view on these moving averages. First of all, I want to say that I've been working on the financial market since 2006. And I have seen many charts, and I have analyzed many theories, approaches, studied them, and applied them, and so on. Also, when I worked for a brokerage company, I used to conduct lectures or courses about technical analysis. And I think that for almost 5 years, I taught many people about technical analysis, about these indicators, in particular moving averages, and many others. And I want to say that I have some experience relating to these charts. And I want to say that this is just my point of view. I don't claim that I am right. This is just my point of view. And of course, you are welcome to share your point of view. If it is different, I am really interested in reading something different. So drop a comment below this video. Now let me share my point of view on this dead cross. Now, usually when I talk with traders and they say I use this kind of indicators or technical analysis, I always ask them, for example, But why do you use exactly this, let's say, numbers? Or like in our case, why exactly the 50-day moving average and the 200-day moving average instead of using, for example, the 68-day moving average and 273-day moving average, or instead of using the 45-day moving average and the 175.3 moving average? The question is, how come you connect these numbers with this asset? And usually you will see that 80% of the people you talk about such kind of things, not only relating to the moving averages, but relating to other indicators, they will say, because everybody uses this and the market works so. And because somewhere people use them, I just copy paste this logic. I don't need to understand it fundamentally. I don't need to know what the logic behind these numbers is, but I will apply it bluntly. And I want to say that just ask some of the people why they use it, and they will tell you something like this: that because the other people use it, that's it. They don't have clear explanation. Now, I will share my point of view on these numbers, why exactly 50 and 200, what they mean, if they are applicable to the cryptocurrency market, and so on, based on my research, on my experience working with charts for the last 15 years, conducting courses on technical analysis, teaching people, and etc. But this is once again just my point of view, and I don't claim that I'm right. First, this let's say moving averages are applicable to the stock market, and let me tell you why. The first one is the 1 quarter moving average, or for 3 months. The second one is the 3-quarter moving average, or for the period of 9 months. So here we should have, instead of 50 days, 66 days, because within 3 months the stock market is open 66 or 67 days, or 22 days a month, because we know that during the weekend the stock market doesn't work. The forex market as well, the commodities market as well, or the traditional centralized financial segments of the market, they work 5 days and then we have 2 days off. That's why we have 22 or 23 accounting, let's say, work days per month. So if we multiply 22 per 3, we will have here 66 or 67 days. Let's say 66 days. Now, if I click on OK, we see that we don't have this dead cross. Yes, it is probably going to take place, but we already removed the dead cross. Now, why 200-day moving average? This is for the period of 9 months. If we multiply 22 days, working days per month, per 9, we will have something close to 200 or 198 days. So that's okay. We don't have to adjust this number. So here we have the 1 month moving, the 1 quarter or 3 month moving average, and the 3-quarter or 9 month moving average. Why people or analysts or chartists trading stocks, analyzing the stock market, use these moving averages? Because the 1 quarter and the 3-quarter periods are very, very important periods from fundamental point for the centralized economy, and in particular for the public and, let's say, the other companies as well. Because usually each and every quarter they do some kind of special accounting. We know that we have per month, per quarter, and per year accounting. So also companies usually they sign contracts like for sales and etc., sometimes using these accounting periods: 1 quarter, 2 quarters, 3 quarters, 1 year, and etc. So 1 quarter is very important indicator. That's why usually even the GDP, gross domestic product, and all key economic indicators in the financial centralized world are published on a quarterly basis. So we have the GDP per quarter, not per 2 months or per 5 months. We have per quarter per year, and etc. That's why I want to say that this is a very important period for the public companies and for the economy in each and every country. Now, the question is, what does the 200-day or the 3-quarter period means for the market, for the centralized market? It means a lot, and let me tell you why. Usually, if you, for example, learn a little bit how to do economic analysis of the global economy, of macroeconomy of some country, and etc., you need these periods because you need 3 quarters to figure out if the economy is entering or has entered a recession, or if it has exited the recession and the economy is entering a period of economic expansion. So we have contraction and expansions. Usually within just 1 quarter or 2 quarters, it is impossible to figure out if the economy is in recession or in expansion. If it is entering or changing, I mean the trend, if we have this trend reversal. And I want to say that's why usually economists, they need 3 quarters to figure out if within these 3 quarters we have this reversal of economic growth, if the economy is expanding or if the economy is contracting and is in recession. That's why in the stock market people use these moving averages because they're very, very important. The 1 quarter moving average and the 3-quarter moving average. Now, the question is, why do we see usually 50-day moving average instead of 60 days moving average? I want to tell you that based on my research, on my analysis and etc., I have figured out, and I have seen this in these books, economic books, that according to many economists and researchers, they were able to find out that in the long run, if you apply the 50-day moving average and the 66-day moving average for the stock market, it is almost the same from a point of investor. And for simplicity, they decided, it was probably in the 80s or in the 90s, for simplicity to change 66 to 50 so that the new analysts learn this much easier, because it's easy to remember 50 and 200 and 66 and 200. But the main idea is that this is a period of 3 months. And that's why I want to say that, first of all, we have to understand the fundamentals behind each and every indicator before using it. Now, let's think a little bit about the cryptocurrency market. First, the question is, if for the public companies 1 quarter and for the centralized economy 1 quarter is very important period, is it really that important for Bitcoin? And the question is that I don't think that directly it is so important for Bitcoin, because this is not a centralized financial economy. But if we start to try to find some association, probably indirectly we are somehow heavily connected. That's why probably it has some indirect impact. But then comes the question, what is 1 quarter in the cryptocurrency market? Keeping in mind that the cryptocurrency market is working 7 days a week. Then we have to adjust the numbers here. If we just want to copy paste the logic of the centralized financial world, and in particular the stock market, and use the 1 quarter moving average. So it should be, we have 90 or 91 working days for the cryptocurrency market within 1 quarter, because once again the cryptocurrency market is open 24 hours a day, 7 days a week, and so on. So we have 91 days, working days per 1 quarter. And now we see that this moving average crossover has not taken place, and we're probably far away from it, still far away from it. Then what is the equivalent of the 3 quarters moving average for the cryptocurrency market in the daily chart. So for the period of 9 months, we have, let's say, 270, 275 working days. So let's say that each month has 30 or 31 working days for the crypto market that is open once again each and every day. And if we multiply it by 9, we should have something close to 273, for example, let's say, working days for the period of 9 months. Then we see that this is far away, and even the price chart is at the moment and at this moving average. And now I want to highlight that if we apply bluntly the logic from the stock market that uses the 50-day and the 200 moving averages, or the 1 quarter and the 3 quarter moving averages, and we simply apply it to the cryptocurrency market, here we are. This is the 1 quarter moving average, this is the 3 quarter moving average, and we see that we don't have this dead cross. So this is what I wanted to talk about today. Now, I don't want to say that this is a bullish signal or this is a bearish signal. I just want to say that this is my point of view on this dead cross. Of course, there are many other indicators, for example, that I use, and we see that the cryptocurrency market is experiencing bearish pressure at the moment. And tomorrow, on Monday, I will analyze in detail the price in a chart of Bitcoin, and let's see what we have there. Now, that's it for today, fellas. Thank you for watching this video. Please share your point of view on this topic as a comment under this video. Of course, I wish you a very wonderful day. Good luck in the financial markets and hope to see you in the next one. It was me again at CryptoSpy.